What is happening, everyone? It's great to see you. Today's date is November 7th, 2020. My name is Ryan Williams, and we are back with another video. So some of the common questions that people have when it comes to investing in stocks, and you'll hear these all the time, is the market good right now? Is it a good time to buy? Stuff like that. A little spoiler alert. It is always a good time to buy stocks, okay? So anyway, all joking aside, there really is no disputing that, buying a stock at a cheaper price is obviously going to be more favorable than buying a stock when it's priced higher. That's just common sense, right? But the real question is, does it really matter? At the end of the day, is it really gonna make that big of a difference? And I'll tell you what, that's what we are here to answer today. So without further ado, let's get into it. Does timing the market matter when it comes to investing in stocks? That's what we're here to answer. And I'll tell you what, some may make a case for it. Some may say that yes, timing the market, buying stocks at the perfect time makes a huge difference. And the reason those people might say that is for the same reason that we covered in the intro, which, is very much common sense. It's more favorable to buy a stock when it's priced cheaper, to buy it at a lower price versus buying it at a higher price. But in the grand scheme of things, at the end of your investing career, which depending on when you started could be 20, 30, 40 plus years total investing, it's a long time. Across that amount of time, how much difference does perfectly timing the market actually make? Well, let's dive in and take a look. So guys, an article from Charles Schwab dove right into this topic, and in their research, they compared the results of 5 different types of investors. Each investor received $2,000 every year for 20 years and left that money in the market in like an S&P 500 index or something like that. Anyway, so while each investor had the same amount of money across the same amount of time to invest, what's different between each of the 5 investors is when they invested that money and how they invested that money. And we want to see how that played out. All right, guys, so in this example, like I said, we had 5 different types of investors. The first of which is a guy who goes by the name of Peter Perfect. Now, Pete was an incredible market timer. He had it down to a science. He knew the exact right time to invest every year. And every year across those 20 years, Pete took his $2,000, waited until the most optimal time to invest, and put all $2,000 into the market at that time. Moving on to our second investor, a lady, very nice lady by the way, who goes by the name of Ashley Action. So Ashley's approach was a little bit different than Pete's. Every single year, as soon as Ashley got that $2,000, she invested it right away. She didn't sit on it. She didn't worry about timing it. She just took the cash as soon as she got it, put it right in the market. And she did that every year for 20 years. All right, now moving on to our third type of investor, a very handsome, very classy gentleman who goes by the name of Matthew Monthly. Now, what Big Matt did is he took that $2,000, instead of trying to time it, instead of just taking it and investing it immediately, Matt took a little bit different of an approach. What Matt did is he divvied that $2,000 up equally across 12 months, right? 12 months in a year. And what he did is he invested that money every month across those 20 years. And Matt's strategy, which we'll dive further into, is what is called dollar cost averaging. Now, moving on to our fourth investor is a lady by the name of Rosie Rotten. And now Rosie, unlike Pete at the beginning, is terrible at timing the market. She couldn't be investing at a worse time, okay? Every single year across those 20 years, she took that $2,000 and bought at the worst possible times. Now moving on to our fifth and final investor, guys, is a gentleman by the name of Larry Linger. Now, Larry's a nice enough guy, right? He says his pleases and thank yous. He's the kind of guy who you invite to the barbecue and he starts the wiffle ball game. He's a fun guy. Larry's a nice guy. Larry's not perfect, okay? When it comes to investing in stocks, Larry is terrified to pull the trigger. Every single year, he gets this $2,000 just like the rest of the investors. He gets this money, but Larry is so scared to pull the trigger that he just sits on it. And so across those 20 years, Larry ends up not investing in the market at all. He's just sitting on that cash. So now that we know all of our investors, let's see who performed the best across those 20 years. But before we do that, before we see the results, guys, leave me a comment below. Let me know who you think is gonna end up with the most money after those 20 years. Is it gonna be Pete? Is it gonna be Ashley? Is it gonna be Matt? Is it gonna be Rosie? Is it gonna be Larry? Anyway, let's take a look. All right, guys, the results are in. So, looking at the graph here, looks like Pete came out on top with a whopping $87,000, investing $2,000 perfectly into the market across 20 years. And from there, it just looks like we go down the line. In second place, it looks like Ashley Action with $81,500. In third place, we have Matthew Monthly, Big Matt, with the dollar cost averaging, totaled $79,500. Not too far behind the other two. Moving into fourth place, we have Rosie Rotten at a whopping $72,500. And in fifth and final place, we have Larry Linger, who has just over $50,000. I know, I ruined it for you guys. Larry was not the winner. I don't think any of us thought he was going to be. So I hope you're not mad at me for ruining that one for you. Looking at the results here, guys, what does this mean for you as an investor? What does this mean for us? Well, a couple things, I think. First off, what the results here show us is that some investing is much better than no investing at all. No matter when you invest or how you invest, just make sure you're doing it, all right? Now, second of all, if seeing Pete's results here is tempting you to wait for the best time to invest, well, the results for Pete aren't anything really to write home about, especially compared to the second and third place holders, Ashley Action and Matthew Monthly, who didn't time the market. And keep in mind, guys, Pete got these results because he timed the market perfectly, which is very hard to accomplish. Even with Pete's perfect timing, he only made how much was it? He only made like $6,000 more than Ashley across those 20 years. So, like I said, in my opinion, it's not really anything to write home about. And you can really stress yourself out trying to decide if this is the right time or if this is the perfect time to buy. In short, guys, at the end of the day, timing the market really doesn't have a substantial effect on the growth of your portfolio in the long run. What actually matters is that you're spending time in the market. What matters is that you're investing at all. And like I said before, guys, this is why Larry fell short in the end, because he could never pull the trigger. But it cost him like $20,000 or so, which is, about how much more money Rosie had than Larry. And remember, Rosie had the absolute worst possible timing when it came to when she bought her stocks. All right, guys, now, if you're still with me here, I know this is a lot of information so far, and I can understand if you're a little unsure on what is going to be the best investment strategy out of everything we've talked about so far. So let me propose an option real quick, and I think it's a great option. We mentioned it earlier. This is the strategy that Matthew Monthly was using when he was investing, and it's called dollar cost averaging. Now, dollar cost averaging refers to a type of strategy where you invest your money on a set predetermined schedule. And taking this approach and implementing it throughout your investing career can have several benefits. Number one, investing on a set schedule can really help you create consistency in your investing routine and can help force you into investing even when you think your timing may not be quite right. Number two, dollar cost averaging can minimize the freak out you might get when you see your stocks go down. Because you're consistently buying stocks using this strategy, you'll undoubtedly be buying them in times when they're priced low and in times when they're priced higher. If you're buying a stock when it's trending downward, it just means it's a good time to buy that stock. Additionally, if you're buying more shares of a stock that you're already down in, dollar cost averaging helps to bring the average price of those shares down, which results in less of a net loss for you. The best part about this is you don't have to worry about timing the market at all. Your investing is going to be much more automated, more systemized, and I'll tell you what, you might have heard this, systems are scalable, guys. So for those of you guys who want to use this dollar cost averaging approach, it is super easy to set up and it's super easy to adhere to. I will show you how I have mine set up using Robinhood. So let's open up the Robinhood app. I don't know why it's glitching, but that doesn't really matter right now. It's all good. What you're gonna wanna do is you're gonna wanna go down to your little profile icon here in the bottom right, go over to transfers, and Robinhood gives you the money to schedule automatic deposits into your account. So on a yearly, weekly, monthly, whatever amount of time period you want, you can invest however much money you want. So as you can see in mine right here, I have it set up to invest $100 weekly from my bank account into my Robinhood account, which I then, buy stocks with. And what you want to do, if you haven't set this up already, hit add automatic deposit and set when you want your deposits to be scheduled. Like, it looks like you can do just once, weekly, twice a month, monthly, or quarterly. So let's do, for this example, maybe we'll do weekly, just like I'm doing. And then let's say you can only invest like $100 a month. Well, that comes out to $25 a week. So using this automatic deposit, Robinhood will take $25 from your bank account every single week. Mine comes out on Mondays, I would imagine yours would too. Every Monday we'll take $25 out of your bank account, put it into your Robinhood account for you to invest in. So like I said, setting this up is very, very easy, guys. All right, guys, well, that pretty much wraps up this video. I hope you enjoyed this one. I know there was a lot of information in this one. I hope it all made sense. I know there's not a lot of people who usually stick around to the end of these things, but if you are one of those people, it truly means a lot. And I am forever grateful for you giving me your attention. With that said, if you are sticking around to the end and you really enjoyed this video, please give it a thumbs up. I'm really trying hard to grow this channel, and giving that like really pays dividends for this channel, figuratively speaking, of course. Additionally, if you're not already subscribed, that would mean a lot as well, so you can stay up to date on all these videos. Anyway, that's all I have for you guys today. I will get out of your hair. Once again, thank you so much for watching, and I will see you in the next one. Hope you guys have a great day.